Okay, everybody, here we go. It's me, Gregory Mannarino. Thursday, July 13th, 2023. This is my pre-market report. We got, I'm laughing. I shouldn't even, it's crazy. We have a bunch of stuff to talk about here. Let's start off with this. So it's almost supernatural. It literally is almost supernatural, the action that we have seen lately in the debt market and also the dollar, the US dollar on a relative strength basis. It's unbelievable, honestly. Yesterday, look, we've been seeing a crazy thing occur. Unbelievable amounts of debt being purchased over the last several days. Yesterday was monumental. Watching the 10-year yield crater, the U.S. dollar, literally getting slaughtered again on a relative strength basis. The MMRI cratering, for which the MMRI this morning, I had to write this down. I couldn't even believe it myself. 238.8, down from 260, just like what, 4 days ago? 10-year yield down to 3.8. It was just at 4.08. And this mechanism, you know how it works, just opens up that doorway for cash to make its way into this already hyper-inflated stock market. And it looks like it's not going to stop, at least today. Trading doesn't start for 45 minutes from the time I am doing this video blog, but stock futures are higher yet again. Gold and silver are catching a bid again. Cryptocurrencies catching a bid. Bitcoin around 30,500, something along those lines. Crude oil relatively flat, but that we since $67 a barrel, that's also pretty supernatural too. Again, crude oil is the lifeblood of the military-industrial complex. It will not be allowed to drop no matter what demand is or anything else. Again, consider the fact that commodities, crude oil, is priced in dollars. The dollar is getting decimated by design. You all know that. Meanwhile, this is beautiful. You're going to love this. So the federal budget deficit just hit $2.2 trillion. Public debt, $92 trillion on a worldwide level. And that's what we're allowed to know. I think these numbers are staggering. But no surprise, you and I have sat right here where we are and discussed repeatedly over and over how debts and deficits would continue to balloon beyond anyone's wildest dreams. And I'm going to let you in on a little piece, a little secret. Let's not tell anyone because, let's keep this between you and I. We haven't seen anything yet. Again, how does this work? The debt-based economic model, it must operate in a perpetual vacuum, in a constant deficit. This is why, again, how many of you believe that, well, two things. Number one, our loving, caring representatives understand the situation of the debt-based economic model. Do you think most of our loving, caring representatives understand or will ever admit that these debts and deficits must continue to skyrocket, otherwise the whole system implodes and we turn into like a Mad Max scenario? Do you think they even know that, or do you think they try to hide that from you because they're clear on it? Me, I don't know. Honestly, some obviously understand it. Most probably have no clue at all. But, that's just the general population as well. So wholesale prices, going back to more economic news, continue to rise. Although they want us to believe that the pace at which wholesale prices are rising has slowed to almost a crawl. Okay, I'm not on that side of the equation, so I can't tell you. But what I can tell you is I shop just like you. I watch prices just like you. And this thing has gotten crazy. Hold on one second. There you go. Anyway, so that's the situation with that. Again, they're doing things here as part of what you and I would have expected as well. The deceptions, the distractions, inflation is getting better. It's getting really, really good. Don't worry about if you can't make ends meet. Don't worry about debts and deficits ballooning. Don't worry about personal debt, household debt, consumer debt at record high. Don't worry that the consumer is maxed out according to every single major retailer right now. Warning after warning after warning, because it's okay. Because the stock market is just off on a tear, defying gravity no matter what's thrown at it. Imagine my shock, imagine your shock. I don't think there's a single person here that's shocked. Initial jobless claims came in at 237,000 for last week. And that's kind of where we stand this morning, people. But, look, how many of you, here's the question. How many of you believe that regardless of what is being fist-fed to us by the mainstream propaganda, things are going to get, just by some miracle, everything's going to get better for the people of the middle class? Do you believe that? No. I believe with every fiber of my being that not only are things going to get worse, but much worse, because it's the design here. It's what they're working towards, this neo-feudal system, extreme haves, extreme have-nots. You will not own anything. This is a world of renters here. Causing people to struggle so they can't focus on anything else. And that's really what is going on here, at least in my opinion, and I would love to hear yours. So again, we have an implied open for the stock market based on futures that is higher, as risk in this market has literally it's disappearing right before our eyes. It wouldn't surprise me. I'm going to let you in on another secret here. We watched the MMRI go from 260 to 238 in like 3 or 4 days. I would not be surprised to see the MMRI or Mannarino Market Risk Indicator, again, free to you, free to everybody, link in the description of this video, drop into the low 200s here. And this market is going to obviously continue to go much, much higher. Again, people, don't fall into the trap of what they want you to do. That is, focusing on the Dow Jones Industrial Average, and that's only 30 companies here. Understand the drivers of this market, and you are going to be clear on why things are happening here. When you have a situation like this, rates are being rigged to the highest possible order and then some. They're supposed to be raising rates, central banks, right? We keep hearing this, but how is it that bond yields are falling through the freaking floor? You think that's just by accident here? How about no? Again, how does it work? This mechanism just forces cash into risk assets and creating greater distortions in the market. So my take on this is, again, I've been net long this market for years. I think people need to be in in this market. It's almost like the gift that keeps on giving. At the same time, bidding against the debt, becoming your own central bank, realizing that these debts and deficits are not going to stop. $2.2 trillion federal budget deficit, $92 trillion in public debt. You think that's by accident too? No. It's all the nature of the debt-based system. And nobody knows that better than you do. All right, people, that's pretty much it for today. Let's see where this goes. Let's keep our eyes on risk. Let's watch what they do to the debt market, the dollar. I'm almost at a loss for words here. I really, really am. You will see me later at 1:05 p.m. Pacific Daylight Time. Tomorrow at this time will be my last video for at least a week. Again, I'm making a cross-country move. I'm going to miss all of you. That's the truth. I will remind you, because everyone's going to say, hey, where's Greg? Where's Greg? Well, Greg is on a journey to a new adventure, and I'm actually looking very forward to it, honestly. All right, that's it, people. Please share the video. Please comment. I want to hear from you on the topics that we discussed here. With regard to debts and deficits, you knew this already because we've been talking about it since like forever. It's not going to stop. This rigging of the debt market, In my opinion, it's going to get even worse from here. You're going to see more rate suppression. You're going to see more cash making its way into the stock market. You're going to see more distortions in the price action of every single asset class. Energy, commodity prices. Commodities are the place to be. You know that moving forward, this whole thing is going to implode at one point. Meltdown of the debt market is going to happen. Again, an enormous amount of effort going in to keep rates suppressed. Where does the cash come from? They have to make it out of thin air. They got to buy all the debt, and that's what's happening here. This is also obviously massively inflationary. All this stuff you all know about already. I told you, nobody knows more about this stuff than you do. If you follow this blog, you are on the cutting edge of this entire thing. All right, people, that's it. Love you a lot. I will see you later. Those thumbs up are so valuable. Please, if you think I covered anything that you find interesting, thumbs up is appreciated, and I will see you later.